Welcome to IAS Project. We are continuing with the videos on Indian economy for UPSC Civil Services Exam. Let's go forward and see what system of national accounts are. System of national accounts, or simply called as SNA, is nothing but an internationally agreed standard set of recommendations. And what does it recommend? It recommends how to compile national accounts or measures of economic activity. Measures of economic activity are actually many. It can be national income, it can be capital accounts, it can be balance of payments and all these. But for our purpose, national accounts are very important. We must remember that these are only recommendations and not compulsory. So many countries adopt part of SNA and keep certain part flexible for the purposes of country specific requirements. SNA is maintained by United Nations, International Monetary Fund, World Bank, Organization for Economic Cooperation and Development, EU, particularly European Statistical Office of EU. This is also called as Eurostat. So all these together maintain system of national accounts. Now, why is system of national accounts needed? It is basically needed such that consistency is there across the world in terms of national accounts or national income. So it is used for comparison purposes only when there is consistency. So this is the main purpose of SNA. SNA describes concepts, definitions, classifications and accounting rules for macroeconomic accounts. So this is the importance of SNA. It gives concepts, definition and classifications so that the same definitions, concepts and classifications can be used by all countries, and they will compile the national income data and other data using the same definitions, and because of such similarity in definitions, they can be easily compared. We have SNA 2008 version, which was released in 2008, which is the latest version. Before this, we had 1993 version of SNA. As of now, work is being done towards SNA 2025. Now let's see what are institutional units and institutional sectors that are mentioned in SNA 2008. Let me remind you that this slide or this page particularly is not very important for the purpose of examination, but we need this to understand the concepts of GDP and other national income measurements. So let's quickly understand what are institutional units and institutional sectors. Institutional unit is nothing but an economic unit or entity which is involved in economic production or consumption. What this means is institutional units are those entities which are involved in production of goods and services or consumption of goods and services. In this process of production and consumption, they can own assets. For example, they can own land, they can own buildings, and they can own other physical assets. And also they can incur liabilities. They can take loans and pay interests and all those. And they engage in economic activities as we have discussed in production or consumption, and they enter into transaction with other entities. Like for example, I am an individual. I can go to shop and buy certain goods from here and I will pay some money. So we are both institutional units in the sense of SNA 2008. Or I am a person. I can buy a car from a car manufacturer or a car dealer. So car dealer and I both are institutional units. I am a person who can take loan from a bank. This bank is also an institutional unit. Let's go further. Institutional units having similar principal functions, behavior and objectives are grouped together and are called as institutional sectors. Institutional sectors are 5 which are given in SNA 2008. So SNA 2008 groups all institutional units in an economy into 5 groups, and these groups are called as institutional sectors. The first group is non-financial corporations. Non-financial corporations are those corporations which are not involved in financial services. For example, a car manufacturing company. Car manufacturing company is a non-financial corporation. Similarly, a mobile manufacturing company or any other manufacturing company comes under non-financial corporation. Financial corporations are an institutional sector. For example, banks, NBFCs are called as financial corporations. Government units, simply it is government, because government can also produce goods and it can also deliver services in an economy. For example, Indian government provides healthcare, provides social security, provides education in the form of government schools. So Indian government is also an institutional sector for the purpose of SNA 2008. Generally, all government units are institutional sectors in SNA 2008. We also have non-profit institutions that serves households. Simply they are called as NPISHS. Non-profit institutions means NGOs, trusts, civil society organizations, and all these. And finally, and most important, we have households. Households are nothing but individuals or their families who are involved mainly in consumption processes. They can also own industries. For example, we have seen households own unincorporated industries, and they get mixed income for this. If you don't know what unincorporated industry is or mixed income is, go refer to our previous lectures of this channel. The video is also given in the description below. So institutional units, when they engage in any economic process like economic production or consumption, they earn what is known as primary income. Primary income is nothing but income that accrues to institutional units because of their economic activities, that is production or consumption or any other economic activity. Let's see what an economic territory is for the purpose of SNA 2008. Again, this part is not very important for the examination. However, we need to understand this part to understand what is GDP. So economic territory is nothing but an area which is under the control of a single government. It includes islands, airspaces, territorial waters, territorial enclaves in the rest of the world. For example, embassies and consulates are considered as economic territory of a country, although they may be located in countries outside. For example, we can talk about Indian Embassy, which is located in Washington DC in USA. So although Indian Embassy is located in USA, it is considered as economic territory of India because India's regulations and rules apply here, and it is effectively under the control of Indian laws. So economic territory has two concepts, one of physical location as well as legal jurisdiction. For example, the territory or the physical geographical territory of India has physical location aspect of economic territory. And embassies, consulates, military bases in foreign countries of India, they are Indian economic territory because of legal jurisdiction of India over these places. Economic territory also includes special zones like free trade zones and offshore financial centers. Free trade zones are nothing but those zones which have like seaports or international airports where custom duties generally do not apply. So you can manufacture, import, export, or you can store any items from other economic territories over there without paying any customs duty. So those zones are called as free trade zones. Question: do we have any free trade zones in India? Please answer in the comment section. Yes, we have free trade zones in India. They are called as free trade and warehousing zones. Please tell in the comment section where these free trade and warehousing zones are located in India. Also, offshore financial centers are also part of economic territory of a country. Offshore financial centers can be countries or jurisdictions. The most famous examples are like Singapore, Hong Kong, Luxembourg, Cayman Islands, Bermuda, British Virgin Islands. All these are basically offshore financial centers. Offshore financial centers, they basically provide financial services mainly to non-residents. However, they also provide services to residents also. But the services that are provided to non-residents are higher in terms of value compared to residents. So this is why they are called as offshore financial center. Offshore here does not mean it is out of the territory of the country. They may be inside the territory of the country. For example, Singapore and Hong Kong, they are territories within their respective countries. However, they are called as offshore financial centers because by the meaning of the word offshore, we mean that they are mainly serving non-residents of the country instead of residents. Also, another question. Please answer in the comment section where Cayman Islands and British Virgin Islands are located and they come under economic territory of which country? Please answer in the comment section. Within an economic territory, different regulatory and tax regimes may apply. So this is mainly up to the government to apply what regulatory and tax regimes in which places within its economic territory. We have also discussed this during our previous videos, how income flows in an economy. Income mainly flows between four entities, that is individuals, investors, government and foreign nationals. Here in this figure, it is mainly how income flows between individuals and investors. Individuals give land, labor, capital and entrepreneurship to investors, and for this they get wages, rent, interest and profit from investors. So this part is basically income which is earned by households from the investors. So this is basically income. Investor produces goods and services. These are nothing but products. And these products are finally consumed by individuals or households. And when they consume these goods and services, they pay consumption expenditure back to investors or firms. So this is how income flows between individuals and investors. Of course, we can add government here. Government is involved because government taxes both investors as well as individuals, and it also provides subsidies and then individuals. Individuals also work for government, they get salaries in return. So similarly, you can make this kind of income flow diagram for all the four entities in an economy. We have also seen this. National income of a country can be measured using three methods, that is production method, income method or expenditure method. So if we use these goods and services, it is called as production method. If we use these incomes, it is called as income method. If we use this consumption expenditure, it is called as expenditure method. So depending on the type of method used, the measure or the term which is used for measuring national income differs. If we use production method, it is called as GDP or NDP. If we use income method, similarly GNI or NNI. So similarly the others. Let's follow in the next video. Please like and share this video. Also subscribe to IAS Project. Thank you.